New CEO and better than expected Q3 earnings. Is this a new beginning for Schwab? Hello, member super savers and bond course fans. I hope you're healthy and well. As many of our Diamond Nest Egg regulars know, October is earnings season when public companies, including Schwab and many other banks and financial institutions, typically announce their third quarter earnings to the market. This October has been looking pretty good for the banking sector so far, with the biggest U.S. banks such as JP Chase, Goldman Sachs, and Bank of America beating the market's earnings expectations, and Charles Schwab fitting quite well this time around, as it also surprised many observers positively. So, as requested by some of our loyal Schwab fans, here are the 3 topics that we'll be covering in today's video. 1. How is Schwab's turnaround going? 2. Who is taking over as CEO and what are his plans for Schwab? And 3. What should you do if you're new to Schwab and or our channel? As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. For those of you new to Schwab or to our channel, you should know that there has been a fair bit of uncertainty regarding Schwab's future direction. After a challenging year, the company announced last quarter, a bit out of the blue, that it would be significantly scaling down its banking business, which we covered in this video a few months back. Link below for reference. While many folks think of Schwab as a brokerage behemoth, which it is, Schwab actually has a very sizable banking business as well. In fact, as of June 30th this year, Schwab Bank is the 13th largest bank in terms of assets in the U.S., according to the FDIC. No wonder then that Schwab's stock tanked last quarter after the announcement about the uncertain future of its banking business. Well, a lot can change in the markets in a short period of time, and that's what happened last week when Schwab surprised Wall Street with its better than expected third quarter earnings, and its share price spiked to the highest level in 3 months. In one sentence, Schwab had a good quarter as client assets, revenue, and pre-tax income all grew healthily year over year. Client assets went up $2.1 trillion, or 27%, from $7.8 trillion in Q3 2023 to $9.9 trillion in Q3 2024. Total net revenues went up by $241 million, or 5%, from $4.6 billion in Q3 2023 to $4.8 billion in Q3 2024. And the main revenue growth driver for Schwab was not trading or net interest revenue, as one might have suspected, but its asset management business, which on a year-over-year basis grew revenues by $252 million, or 21%, from $1.2 billion in Q3 2023 to nearly $1.5 billion in Q3 2024. When markets go up, so does the asset management side of most financial companies typically, and markets have been generally on the up and up in recent months. The overall bullish market pushed up fund values and client assets last quarter, which translated into higher fund volumes, higher investments into funds, and consequently higher fees and higher revenues. Basically the dream scenario for any asset manager, as was the case last quarter for Schwab. And yes, this does mean that when market indices go down, these client asset numbers here and revenue numbers here are also likely to go down, all else being equal. Time will tell. For the last quarter, though, things did look up and up for Schwab. But not only did client assets and revenues go up year over year for Schwab in Q3, expenses went down as well by $218 million, or 7%, from $3.2 billion in Q3 2023 to $3 billion in Q3 2024. And yes, the cost savings seem to have come mostly from the hard measures they had announced previously, as both employee numbers and capital expenditures, including office facilities, decreased over the past 12 months. And just near us, we've seen at least 2 Schwab offices close recently. So, client assets up, revenues up, and expenses down. This worked almost wonders for profitability and means that year over year, income before taxes jumped by $459 million, or 33%, from about $1.4 billion in Q3 2023 to more than $1.8 billion in Q3 2024. It seems everything is turning in the right direction for Schwab. There was even some good news on the funding side as the company continued to pay off its expensive FHLB loans and other long-term debt. Now, nothing is perfect in life. And if there was some more sobering news in these overall upbeat earnings, it was that bank deposits have kept shrinking at Schwab, likely due to the fact that folks have moved those bank deposits out to higher yielding alternatives, such as money market funds and treasuries, as many of our Diamond NestEgg regulars have. However, the continuing losses in bank deposits were somewhat compensated in this category here. The line payable to brokerage clients has grown a fair bit over the past year. Remember this, especially if you're new to Schwab and or to our channel. We will be coming back to this later because this growth here, while it's good for Schwab, it may not necessarily be good for you as a Schwab customer. But there's an easy fix to this one. We'll talk about this in greater detail in the last section of this video. For now, let's wrap up Schwab's third quarter results. Client growth, asset growth, revenue growth, and income growth, coupled with significant expense reduction and a bit of debt reduction, it's easy to see why the stock market was jubilant after Schwab announced these better than expected earnings numbers. It's been a rocky year for Schwab's share price, but at the time of this taping, it is finally above where it started the year, which brings us nicely to the next section of today's video. A few weeks ago, Schwab issued a press release with the headline, Walt Bettinger to retire as CEO, effective December 31st, 2024. Rick Wurster, president of Schwab since 2021, will be named president and CEO and will join the Schwab board of directors, effective January 1st, 2025. Wurster's biggest job will be to lead Schwab through its existing transition, with a continuing focus on figuring out where the company's future revenues and profits will come from, now that one of their once lucrative moneymakers is much less lucrative, namely paying deposit clients very low yields on their cash in Schwab accounts. Based on this recent Wall Street Journal article, it seems that Wurster will be targeting loans and financial advisory for growth, as well as specific market segments like high net worth individuals and active traders. As always, we'll be watching developments keenly here at Diamond NestEgg. Now, Wurster also highlighted Schwab's customer service excellence and the importance of keeping existing customers happy as a key selling point, which I personally fully agree with, as I love their fast, friendly, and competent client service as well, bringing us nicely to the next section of today's video. So, remember this category payable to brokerage clients from earlier in the video? And when I said that while growth in this category is good for Schwab, it may not necessarily be good for you as a Schwab customer. Payable to brokerage clients is basically excess cash that customers have parked in their brokerage accounts and that Schwab pays the customers interest on. Now, the good news for brokerage clients is that they do earn at least some interest on their uninvested cash. The bad news is that this is what it's paying now, 0.20% APY. So at the end of the third quarter this year, Schwab customers had nearly $90 billion in cash lying in their brokerage accounts, with most of it earning a somewhat measly 0.20%. If this is you, if you're new to Schwab and or Diamond NestEgg, here's a snapshot of what Schwab's money market funds are yielding currently, what you could be earning instead. And this is where a lot of the Schwab folks who have been watching our channel actually park the excess cash from their Schwab brokerage accounts, and also where we park our excess Schwab cash. Check out this video here if you want to learn more about Schwab's money market funds and how to earn some decent yields on the cash in your Schwab brokerage account. So personally, we have a small amount of cash with Schwab. And as I mentioned before, I do think their customer service is excellent. They also have a very good variety of corporate and municipal bond new issue offerings, if this is something that you are interested in. And for the time being, it seems that they are having a good start with their turnaround, as we've already walked through. Only time will tell how these transitory times will play out under the helm of new CEO Worcester. And of course, we will keep you posted as news comes up. So, what do you think? Are you happy with Schwab's platform, customer service, and everything else that they have to offer you? Or are you still undecided? Or have you already moved elsewhere? And if so, where? All right, members, super savers, and bond course fans, I hope you enjoyed this video and learned something new. And as always, if you want to really get up to speed on bond investing and building out your bond portfolio while rates are still attractive, then check out this video here on our 2024 bond courses. Or come join our next live YouTube member Q&A on Sunday, October 27th at 5 p.m. Eastern Time, 2 p.m. Pacific Time, where we'll be discussing the 2, 5, and 7-year T-note auctions. I've also linked all the details on our bond courses and YouTube Super Saver membership below this video for your convenience. See you again very soon with more brand new wealth building content for your financial journey.